What makes a good property investment? This is a question that many of us who are already in the property market think about constantly. We think about it because we want to help our clients, but we also want to help our own financial future individually and for our families. Today, as I discuss it, it must be noted that I'm not a financial advisor. All of these opinions and observations are based on my 15 years experience in the finance industry. I've discovered to figure out what a good property investment is, I should take into account the experiences of both people who have succeeded and people who have failed in this field. Let's get into it. So rule number one, what is your goal? When I ask most people what's important to them about buying a good property investment, many of them tell me it's for capital gain. When I hear these words, it honestly makes me cringe because it's a little bit ridiculous. You wouldn't buy a property that you want to go down in value. Many people want to get rich quick through property investment, but want to do nothing to actually achieve that. The problem with that is that there's millions of Australians that already want to get rich that way. So the probability that you're going to be successful through capital gain is actually pretty low. So when you're defining success, you need to know what your actual objective is. You have to think about, what is it I actually want to achieve? What are my financial goals? Because most people don't think about this for long enough. They just start thinking about the solution right away. This is because they haven't thought hard enough about it. Their solution is just to make a heap of money. Unfortunately, that's not a strategy. It's a strategy that fails the majority of the time. So understanding your goals is very important. If I could point someone in the right direction, it would be to ensure that you've got enough income for your retirement. Let's face it, most of us are going to live beyond 90 years, which means that retirement should be planned carefully. The question is, how are you preparing for it right now? The next important thing in identifying what a good property investment is the yield. Keep in mind that the higher property prices go, if the rent does not come up with it, the yield goes down. So the yield is basically the rental income that you're getting against the property, which is measured against the value you paid for it. Let me explain why low yield is a problem. Basically, how it works is that a low yield at 3.5% works well in an environment where interest rates are decreasing because your cost to hold that property are going down. And that's the environment that we've been in the last 10 years. But when you're in an environment where interest rates are increasing, your cost to hold that property are going up. And in the last 3 months, the cost to hold those properties have gone up 20 to 30% because interest rates have risen so fast that it's now trapping people. I'm talking to borrowers every day that are really fearful that if the rates keep going up, they're going to get hurt by this inflation. This is the problem when you're buying a 3.5% yield and you're buying in a place like Melbourne, you don't have enough income to back it up. All you've got is borrowing. If you understand economic history, it will tell you that the guys holding the most debt get wiped out. Now, I want to link this back to rule number one. What's your objective? Is your objective not to get wiped out? Actually, if you get wiped out, that puts you the furthest away from achieving your goals. It doesn't make sense to me why you would put that at risk. I actually do understand why people want to risk everything. I understand that they've grown up in the most prosperous of times and that they've been allowed to make mistakes and get away with it. Unfortunately, that's not an environment we're coming into. We're coming into an environment where if you make mistakes, you will be punished. And the point I'm trying to make here is that you should avoid these mistakes, and focusing on yield is a pretty basic way of doing that. If you look at the past few thousand years of investing history and you look at what we're doing in Melbourne and Sydney in the last 10 years by investing at a 3.5% yield, basically all of history are laughing at us. It's just stupid. We have to stop this. Personally, I'm for a 5% yield, which is the long-term average. Number three is my take on buying an investment versus buying a house. If you understand property investing, you understand that you can claim depreciation on buildings these days. This may sound very appealing to investors, but I'd like to emphasize that buildings actually depreciate in value. The depreciation is the deterioration of an asset's value as time goes on, owing to wear and tear. So if the building's value is going down, nothing in the property is appreciating. So I don't understand the point of view why people want to own apartments. Because if you're in an apartment building with 100 apartments, for example, and you're on 1,000 square meters of land, that's only 10 square meters of land that you're owning, which it's not very much land. It's a very low proportion of the land to the actual size of property that you've got. So immediately it tells me it's risky because I'm not owning much land. The second thing to look at with apartments is I don't trust the supply and demand issue here. I actually think that we're in a short supply of apartments in the next 5 years. I think we're going to see great rents in the city. I think we're going to get great capital gain. But the reason I don't trust investing in apartments is because once it becomes favourable again, councils and developers will get together and they'll deal with each other because they've both got a lot to gain out of it. So what happens is the developers build a lot of properties where your property is, and there becomes an oversupply, and that pushes down the value of your apartment. So you can't control the supply issue. The point I'm trying to make here is that sure, you could have big upswings over time, but you could also have big downswings where there's a large amount of oversupplies. Think about it. If you own an apartment where there's 100 on the block and then another 20 buildings come up around it, and the ability for you to sell your apartment becomes lower just because it's going to be a lot more supply in the market, that's not going to be good if you're going to wait another 5 or 10 years before the supply issue fixes itself. That is why I like land better. It always appreciates in value. It's versatile. You can improve it. You can build a family home on it. It's never going to go. Land is always an asset that you're going to be able to sell because someone's going to be able to find use for it. Land is always a good property investment. Number 4 on my list is location. Location is very important in property investing, and as you consider the location, seek those with infrastructure developments in the pipeline. Infrastructure projects often contribute to economic development, job creation, and productivity. Whenever there's a lot of infrastructure coming, it's going to draw people into that area with skills, and those people with skills are going to earn more money because they're working on these infrastructure projects. Sooner or later, they're going to force the price of housing up because demands are also going to go up. So in identifying what makes a good property investment, carefully studying the location and infrastructure is very important. I understand that everyone has their own unique goals and objectives, and there's always hundreds of different options to accomplishing anything. Again, I'm not a financial planner, but those 4 things I've shared from my point of view are from my 15 years of experience in this game. If you want to discuss your investment property portfolio or future lending for investment properties, you'll need a good mortgage broker like the team here at wbell Mortgage Broker. Feel free to get in touch with us and have a chat today. Cheers.